ABC Bullion's 360 Market Wrap. My name's Bron Suchecki and I'm joined by Nick Frappell, Global General Manager at ABC Bullion. Welcome, Nick.
Hi, Bron.
The gold dipped down into 1700 but it recovered pretty strong last week. Do you see it continuing up? Or?
I do, yeah. Look, it went $15 further than, we talked about 1710 last week,
yep.
But in the end, it still tested that pennant breakout. It rejected that low beautifully. I think there's a little bit of work for it to do around the, Friday's highs and so on. But basically, I see it extending up to 1785, 1800. So part of another leg up, definitely.
Yeah, the Australian dollar was also pretty strong, pushing up to 67 cents. Going to continue, go higher or come off?
There are plenty of targets on the point and figure to 66, 67, and they all cluster around there. So it's no surprise that the Aussie dollar is sort of lingering at that level. Trade surpluses and so on helping the dollar. Geopolitics not helping the dollar. If it breaks through 67, maybe 69, but I think it'll find strong resistance there.
Right. So Aussie gold as well also dipped down into 2,550. Yeah. I mean, was that a buying opportunity or is it going to come back down to those levels?
I think it was, yeah, because it had decent technical support there. There was support from the daily Ichimoku cloud at 2541. So yeah, it was technically supported well.
Yeah. The London Bullion Market Association, which is the establishment, if there is anything called an establishment, had their Alchemist magazine article out with a call for $7,370 exactly by 2030, so that for the end of the decade.
Yes.
I mean, what do you think about that forecast and the approach taken?
I think the approach was really interesting. I think anybody who talks about modeling gold as a very long duration a zero coupon bond, feel like I'm communing with my spirit animal. So I think it's a really, really interesting article. I think the thing to remember is that really ambitious call was predicated on inflation of 5%, zero, the treasury linked bond yielding zero. That's one outcome amongst many.
Right.
If inflation was 5%, and I suspect the Fed would probably not be managing the yield curve quite so aggressively, but it's definitely something that could happen. Very interesting article.
Okay, and ETFs also have really been chunky inflows since COVID. Is that likely to continue? I
think so, because the picture for gold remains positive, and also ETFs are benefiting from the fact that you don't have that expensive roll cost if you're long of COMEX futures.
So all those troubles with COMEX.
And that's actually expensive to be long via the COMEX now, whereas it's not via the ETF. All
right, thanks, Nick. You can stay in touch with the markets by following us on our social channels as well as abcbullion.com. And this Thursday we'll nerd out a little bit, Nick and I, with a longer sort of monthly review of the markets. Until next time, thanks.
Thank you.